Auto layoffs continue to explode across the nation as multiple leading automakers are conducting layoffs and shutting down factories in a push to convert to automation. Now, what does that mean for us as consumers? And is the car market finally crashing? Well, today we're going to discuss all of those things, and we're also going to separate used cars from new cars because there's a massive difference. Now, be warned, there's a potential future auto bailout coming as another 165,000 layoffs are expected to happen. Now, at the end of the day, I just want to buy a truck for pennies on the dollar. And if you're a viewer and you want to buy a vehicle for pennies on the dollar, comment below and let me know whether or not you guys also want to do that. But again, we're going to go over used cars, new cars, and exactly what's going on as far as all of these sudden layoffs in the auto industry. Mitch Vexler, how are you, sir?
Good. It's finally warming up here. We had an extraordinarily foggy morning, but everything is okay.
That is true. That is true. Mitch, well, let's jump into prices. We're going to start with the funnest thing, and then we'll hop into the layoffs. So I'm going to show the viewers what's going on with prices for used cars. The viewers are absolutely going to love this segment, which is titled Used Car Price Trends for February. And let me give you guys a clue. They're all down according to Carfax. Now, Carfax used car index price tumbles continue. Sometimes there are downward forces that affect used car prices, and sometimes it's more of a matter of time of the year or seasonality. Whatever the reason, shoppers looking for good deals on used cars have reasons to be optimistic right now. Sounds like every other sales page. In fact, the average prices for several segments, listen to this, guys, are at all-time lows for used car index. That's great news. Prices for used car in all categories dropped from December to January. We're going to look at the year-over-year price decline and the month-over-month price decline, starting with SUVs. Remember, you guys, this is not new cars. This is used cars. If you get a new car, usually the dealer can do crazy buying incentives like financing for 0, 1, 2, or 3% interest rate. But for a used SUV, the average price is only, I say only, it's still a lot of money, $22,963. I'm just used to right after lockdown, a used SUV was $100,000. As far as the month-over-month decline, prices dropped 1.6% month over month. That's a sharp drop, and 2.9% year over year. Now, when it comes to normal cars, the average sales price is $17,700, a 1 month whopping drop of 2.6% 1 month, or 4.4% year over year. Pickup trucks, that's what I want. Unfortunately, the average is $32,118. That's down only 1.3% month over month, but a whopping, and this is great news, unless you have a truck and you want to sell it like I do, 5.6% down. So used trucks down 5.6% year over year. That's a steep drop. Luxury SUVs sitting at an average of $32,793 with a monthly drop of 1.4% and a yearly drop of 2.3%. Luxury cars sitting at $29,720, a monthly drop of 1.3% and a moderate year over year drop of only 1%. Hybrid EVs sitting at an average of $29,190, month over month decline of 2.5%, year over year decline of 2.2%. Vans sitting at $21,200. If you have a lot of kids like I do, then you'll love Vans as I do. Down 2.1% month over month and 5.5% year over year. A couple things I want to point out here. Carfax used car index segments saw drops in January. Some of them hit all-time lows. The price of used cars, which are sedans, coupes, wagons, and hatchbacks, dropped by about $500 from last month, making the first time in history of the Carfax used car index that the average price of this segment has dropped below. Also dropping $500 just this month is the average price of used luxury SUVs on Carfax.com. Their average price has dropped below $33,000 for the first time. Another all-time low. That's exciting news. One more all-time low. Also hitting an all-time low are used SUVs with an average price drop of roughly $400 to land below $23,000 for the first time ever on the index. So we got a lot of stuff happening in the used car market, but what about the new car market? Read this, guys. 2 reasons new car prices will crash in 2025. First thing I want to point out is when it comes to new cars, they're not seeing the price cuts that they're seeing in used cars. Just like with new homes, they can offer crazy incentives to make it appear like there's not a real big price drop until you drive off the lot. Remember that. Overall, for new cars, the average transaction remained $10,000 higher than 5 years ago, sitting at $38,259. Now let's read a little bit about their concerns. Inventory concerns and consumer pushback could drive heavy incentives. U.S. inventory of new cars topped, think about this, 3 million vehicles for the first time. That's happened since the pandemic. They got a ton of supply. In fact, they have 84 days of supply. That's the highest figure seen since 2019. Let's not forget, you guys, as auto debt has absolutely skyrocketed and the cost to have an automobile has absolutely skyrocketed, one of the things that has not skyrocketed is the real median household income. So meanwhile, we've been making less money, drowning in debt, and overall suffering just to afford to live, and yet they still are trying to sell 3 million cars. You better believe that new cars are going to cut their prices, and insane buying opportunities should happen. But I want to talk about something else real quick. I want to talk about a potential auto bailout. And you guys may be wondering, why am I talking about that? No one else is. And the reason I am is because I went through the global financial crisis and lost everything, and they bailed out the auto industry. And we need to make sure that doesn't happen again, because it's not fair to us, the taxpayer. Why would we bail them out? So Mitch, first question to you, sir, is can you please just warn America why we must not have a new, because they're going to ask for this. We know they're going to ask for this. Why must we not allow another auto bailout to happen?
It's a very complex issue. We're right back to the Boeing problem. There are so many lines of input and so many lines of fraud connected with these problems. So if you're an automobile manufacturer, and bear in mind where I come from, which is Windsor, which is automobile town, very blue collar, I'm highly sensitive to these problems. I've grown up around it. I've recognized it since I was 5 years old. So I have a little bit of background in this problem. The inputs are global. The fraud that is created, as we've discussed even on the real estate taxing side, are all connected to this. Therefore, the outputs are fraudulent. The problem is when you say, let's not have any bailouts, there's truth in the statement. The problem is, are you putting a national security risk on the table by not having manufacturing plants of this caliber? And as we sit here today, there's simply not enough information on our side of the table, my side of the table, to be able to determine that. It takes a lot of horsepower, i.e. Doge, to figure out, is this worth saving? The inputs, when CEOs make decisions at the automobile plants that are for the benefit of the CEO and not for the benefit of the employees, are one of those problems that has to be looked at. And times change. And yes, I understand that automation, everybody says we're going to automation, but the truth is it takes human manpower in order to make these things work. It takes brain power, engineers, programmers. So getting rid of a plant, maybe an entire company, these things have to be looked at. There's just simply no clear answer other than the automobile industry is in trouble again. Generally speaking, I am very much in favor of not providing the bailouts, but I recognize how bad this is going to be. And there is truth in the statement. They've done it to themselves. Yeah. Again, where are your buyers coming from? Where are your leasers coming from? Those who lease the cars. What is their debt load? What is the debt per household? What is the credit card debt? And if you, the CEOs of these companies, can't answer these questions, you need to be shown the door. And so does your board. You put these companies in harm's way, and it is on your watch. You didn't do your job, but you put an awful lot of money in your pocket. Those are things that have to be considered as bad inputs.
Yeah, I don't want to pay some CEOs bonuses with my tax money. I would rather have that money go towards Western North Carolina or Tennessee for the people that were affected for the hurricane. But Mitch, can you try to articulate, just like the housing market, there's existing and then there's new. Why do you think in the auto industry, why do you think that price decline is a lot more pronounced and across the board when it comes to used vehicles versus new vehicles, holding their value a little bit better, then moving to incentives? Why the difference in trajectory of price decline?
I believe the answer lies in the data that the people who are in charge of these companies refuse to look at or are incapable of understanding. When you use logistics and you say just in time, well, that means that your parts coming into the plants have to arrive at a certain time, and the parts that are leaving have to leave on a certain time. But if the supply chain gets damaged, which it has been, then that causes problems with inventory build. And now what you see, both on the used level and the new level, is inventory build. Yet eventually when that inventory burns down, then they're going to start screaming, well, now we got to produce more. In other words, because they can't get in front of the problem, because they refuse to recognize the problem, which is the debt load per household, they are reactionary rather than proactive. And the reactionary usually saying, well, we're going to do this transaction over here, try and make up for it. And that transaction ends up putting more money into the CEO's pocket rather than looking after the corporation that is creating the widget, the car, which it should be. So these problems are strictly, again, falling at the feet of the CEO and the boards of these companies. You have screwed this up because you're incapable of understanding the data that's sitting right in front of you. And that's the problem.
Obviously, the auto industry is barely hanging on. It's probably on its last lifeline. We see that in the prices of vehicles. We see those new vehicles skyrocketing over 3 million units. We see crazy buying incentives, prices being slashed. But another thing that we're seeing is the automotive industry try to do everything they can before cutting prices even more. And we see that, you guys, because of the layoffs. Those layoffs are not just because of automation, although a lot of it is. Let's take a look at the most recent automotive layoffs and try to figure out what that means to us as consumers, say we want to purchase in the next 3 years. Take a look. For the most recent automotive layoffs, I'm not even going to go into Nissan and the 9,000 layoffs that they announced, but Porsche is expected to lay off 1,900. This is an interesting headline that just came out. Nearly half of the managers predict layoffs in 2025. In addition to that, this just came out. GM to lay off some workers at Rochester plant. In addition to that, this just came out on the 24th. U.S. Auto Safety Agency that's probing Tesla cuts 4% of their staff. Volvo announcing layoffs at New River Valley, Virginia truck plant. That's the site of a major 2021 strike. They have about 3,600 people they employ. In addition to that, this article just came out. Continental to cut further 3,000 jobs in R&D and automotive branch. According to experts, tariff now paused would boost new car prices by thousands, lead to big layoffs. And the reason why that would lead to big layoffs is because consumers can't afford that. So a few things I'm going to read here. Assessing the tariff proposal, analysts estimate new car prices on average would likely increase, listen to this, by anywhere from $1,000 to $9,000 or more. Some vehicles would be affected more than others. They also estimate that more than 165,000 auto workers could be laid off if tariffs remain in place for any considerable time. So that article goes on and on, Mitch, from Ford, GM, all of these automakers saying, please don't do that. We'll have to close down. And that's fine. To me, close down. You've been making a killing off of us. I remember how expensive and how they jacked up the price on us. Remember when those key chips, remember all that? So I have no mercy for them. I've already bailed them out once in my lifetime. If I've bailed them out once in my lifetime and they still can't survive, they need to close down. And before they close down, they need to offer us some of those new cars, Mitch, for 40, 50 cents on the dollar. Do you think that, with all this turmoil, okay, quantitative tightening, lack of median household income, expenses going up, potential tariffs, a lack of demand, all of these things, what does that mean for the consumer that wants to purchase a vehicle over the next 3 years? So can you kind of give us a breakdown, put yourself in the perspective of the consumer? I want to buy a car. Should I do it next year, this year, 3 years from now? What do you think, Mitch?
That article was from the Detroit Free Press. What in the world do you think they're going to say? Where were they when Detroit was falling apart at the seams due to bad political corruption and the bad union problems? Detroit is now 30% of its full-time size. Okay, so lack of intelligence there. With regard to the statement that, well, people can't afford tariffs. You want to know what people can't afford? They can't afford fraud. They can't afford to keep the roof over their head. The tariffs are just the flavor of the week. And there's no mathematical correlation at this stage that those tariffs are going to do any harm. So it gets a little annoying to hear this type of crap nonstop from one press organization to another, because it's clear they don't have an ounce of intellect. You haven't done your research, do your homework. With regard to the idea of the value of a car, go to cash. That car will show up at the price you're willing to pay, and a price that doesn't justify having to get, well, we're going to make up the difference in the interest rate. So if you have a lease, you could end up actually trading down in vehicles, not trading up. So that's something to be very cautious of. In other words, they can make more money or recoup money in the value of a lease, or recoup money if you're going to own the car in the mortgage payment itself. There's all sorts of tricks and gimmicks that they can play. The bottom line is none of it's relevant. The only thing that's relevant is your pocketbook and how much can you afford given your median household income. That's the only thing that matters. All this other stuff is just hot air. It's kabuki theater designed to take your money and put it in their pocket.
Okay, but nevertheless, prices are going down and layoffs are accelerating. So if I'm a consumer and I want to buy a car, do you believe that the longer that I wait, that potentially the better deal that I could get moving 3 years into the future? What do I do, Mitch, as a consumer? I'm aware there's an issue. Maybe I can articulate it. Maybe I can't. What do I do as a consumer to get myself a great deal?
There's all sorts of ways to get great deals, right? You can go to car auctions. You can do all sorts of things. The point of the matter is don't get overextended on a vehicle that you don't necessarily need today. Now, if you need it, everything we're saying, just ignore it, right? But don't get into debt. So time will produce lower prices because both the used car market and the new car market are oversaturated with inventory. It's just not moving. And the reason it's not moving, like we said, is because mom and pop can't afford it. That's your straight answer. They can't afford it. If they can't afford it, supplies go up, prices go down.
How many years do you think that we're going to see price decline? Obviously, they can't hold on to the prices, the peak prices. How long does this continue absent a bailout, or even with a bailout?
A bailout wouldn't probably occur for 2 to 3 years down the road when the pain is really evident. I don't think the pain right now today is that evident. I think people are just going to say, we're going to keep the fraud going and whatever happens, happens, and that's wrong. You've got to work these debts down in order for not to have a complete disaster. With that said, automobile prices are coming down. I mean, go and look at the inventory in the lots. Nothing is selling, or very little is selling. Right? You've got to be fairly desperate to go and buy a car, or you've got money that's way above the median household income, and that puts you in a different price category. That's fine, but that's not the majority of people. The majority of people cannot afford the debt loads, and this is just based on median household income today, never mind the school debts that they've put on top of your house. That's why this is a huge problem.
Back into the automotive job market. Okay, so we have a few things happening. I would say probably the three major factors here is number one, inventory is like 3 million cars, right, for new cars. But number two, also, like you just said, mom and pop and the consumer's purchasing power is squeezed to the max. They're trying to squeeze blood or juice, as you say, I think, out of a rock. That's not going to happen. And obviously the third thing, Mitch, and I'm curious what you think is the worst here, but the third thing is automation and AI. Regardless of what the unions want, they are moving to automation. It is what it is. What do you think being that all three of those factors are incredibly powerful and crippling to companies, what do you see happening as a result of those three factors to the job market for the next few years, specifically in the auto industry?
The job market has been put under stress due to fraud. And until that statement is recognized straight across the board in every automobile company, and how do you fix that problem? Well, you fix that problem by eliminating the debts or doing massive workouts of those debts. And yes, you're going to say, okay, well, then the stockholders are going to take a hit. The stockholders are going to take a hit anyway. It's not a question of if, it's a question of when. But don't you think it would be better to say, okay, fine, we have these debts, corporate debts, be it mortgage-backed securities, call it whatever you want, and the secondary tranches of finance that aren't worth the paper they're written on. So don't you think it would be better to say, let's work these down 40 cents, 50 cents on the dollar. So at least we've got targets to make these companies be able to survive and not have massive impacts on layoffs. The problem is the debt. It's been all the monkeying around, and it's the interest on the debt at the corporate level as well as at the government level that are causing these problems. You get hired to do a job. If the job exists, then you should have that job. The problem is that when people are getting laid off, it's because the companies are striving to put more money, and they think, well, just laying off these people is going to fix that problem. And that statement isn't true. There's no nexus between them. The problem is the debt. The problem is the fact that even the corporations can't pay the debt. Ergo, the fraud. The secondary tranches are the fraud. Just like in the school districts, the school bonds are the fraud. They cannot be paid off. People have got to recognize that truth, and then we can deal with what needs to happen.
Mitch, there's a lot more turmoil to come for the auto industry. We're probably going to hear about the next bailout right around the corner, but that also means that as consumers, we could potentially get a fantastic deal. And before we go, Mitch, and this is a little bit off subject, but can you tell the viewers how to get a good deal and what the process is for purchasing a car through an auction?
That depends on the auction house. Some auction houses prefer to deal with dealers, people that are in the business of buying and selling cars. I have a good friend of mine who does that, and he buys cars 50, 60 years old to turn them into resto mods. He also owns a Lotus dealership and a Ferrari dealership. Pretty interesting character, very interesting business. He goes around the globe to buy assets for his client. So that's a very interesting model. The other model, there just happens to be a car auction in Carrollton, Texas. So that will deal with the public as well. They allow dealers and the public. It's a great thing to do if you know how to hold on to your wallet. You can't fall in love with the bid process and then have the auctioneer push you into something that you just overpaid for. So you've got to be somewhat careful on that method. The other thing is you got to know what you're buying and you got to know what you're looking at, right? Because there's no guarantees at these auctions. You've got to have a real sharp eye. You've got to ideally be in the business. If you're a mechanic, a mom and pop mechanic, you've got a pretty fair idea what you're looking at. But I've seen cars that were missing pieces to the engine that sold at prices that, yeah, you wouldn't want to buy them for. So
Right.
You just have to be careful. But flip side of the coin is there are deals to be had.
All right. Sounds good. Maybe something that we can open through the recession is a used car dealership. Mitch, what do you think?
It's not my cup of tea, but it's okay. I mean, there are, point of the matter is just be careful, watch what you're buying. Don't get into debt. And if you can afford it, you'll be fine. Whether you buy a used car or a new car, that's up to you. The bottom line is don't get in over and above your head. It's not worth it.
Yeah. Use math, not emotion. Now, I want to give you the last words, Mitch. How are we going to end this video out today?
I would ask that everybody go and look at the videos that we've done in the last month. They are truly fantastic, and they're very much to the point, and that goes all the way to Helen Kerwin's video, and that goes to the video that we created on behalf of President Trump and Elon Musk. It ties to the documents that we sent them. So within the last month, what we've gone through here is absolutely massive, and everything is being documented. We're showing it free of charge to everybody, because at the tail end of the day, the fraud is so bad, it's got to get fixed. And that means workouts. but we're laying the groundwork through the criminal complaints to put that power back into the hands of every real estate property owner where it belongs.
So join the movement, help us take back the American home and give it to its people. Go to the link in this description, sign the petition, learn how to help us end property taxes. If you don't own a home, obviously I have a free home buying course. Take that so you can learn. But either way, you guys use the math, not your emotions. And if you're out there investing in real estate or even a car in the car market, you guys already know, we wish you luck and we hope you win.